Hello, everyone. This is Kevin here again, and I would like to talk to you about break even positions, securing risk while trading. A lot of people have actually asked me, do we have alternative risk management options when it comes to moving to scratch, securing risk? And I thought this might be nice to actually get into this idea of moving to scratch and seeing some options you might want to consider while also enforcing the conventional 60% to full take profit scratch rule that we have here in DTFL.
First, let's look at the standard rule for moving to break even. This is actually one of the simplest rules we have in our risk management portfolio. But yeah, so the rule is simply move to break even when you're 60% to full take profit, right? So this is simple, right? If you have an entry somewhere at this price, we take let's assume we take our entry here on the breakout of that level, right? And our stop happens to be 24 pips, right? Or 25 pips. Our take profit is usually 2 to 1, right? So we will go for a 50 pip take profit. So the standard rule will be move to scratch when you get to 60% of 50 pips, right? 60% of 50 pips is 30 pips. So assuming you took your trade here at 1.6815, you would be looking for 30 pips from that level, which would be at this point here, 1.6845, right? So basically, you're going to move to scratch after price makes it to 30 pips because your full take profit is 50 pips. Assuming your full take profit were to be 20 pips, 60% would be 12 pips. So you'll be moving to scratch at 12 pips in profit. So that's the basic rule. Just move to scratch when you get to 60% of your full take profit. Now, this is easy. This is basically the easiest idea for moving to scratch. Once you're at 60%, the probability based on backtesting shows that you're likely to hit profit before you keep break even. You're most likely to have that outcome. That's one. Two, because clearly it's closer to full take profit than it is to go back to break even. You're not paying attention to price action in this sense. You're just paying attention to the price. So if price gets to your 60%, move to scratch. So that makes it very easy, very easy to follow. And for trading consistency, the simpler the rule, the better. Another reason why this simple technique is the best is because it gives price action your trade the most time to breathe, right? Let's look at this example we took on the 2nd of June, I think, right? I had to take this trade after I got the confirmation right on this candle here. I was looking for price to pull back to 15 pips from the high, right? So I got into this trade at 15 pips from the high, aiming for a 40 pips take profit, having a 20 pips stop. So since I have a 40 pip take profit, my 60% will be 24 pips, which is somewhere around here. And as price got to that point, I moved to scratch. How do I generally implement this, right? Immediately I get into the trade here. Once I'm in the trade, I use my arrows. This was the trade here. I use my arrows from the area where I got into the trade, right? And I measure from the area where I got into the trade 24 pips. And then I right click on my charts, go to trading and select a lot. And then a lot comes up in that area. This is hindsight, right? So this would happen before that candle forms. So you have an alert line somewhere here. So basically, when price gets to that alert, you get an alarm, and then you can just move your stop to scratch. That's how I implement this style of moving to scratch. Now, but there are other two ideas that I would like to share in this video that you might actually want to pay attention to, and I'll tell you when I actually use them. Now, say for instance, this is your stop run, right? And we get a confirmation candle right here. This is your stop run. We get a confirmation candle right at this point. This candle gets confirmed. So we take our entry. Let's assume that's the entry point as well. So we take our entry right at that point. And I'm looking for, this is 13 pips, right? So I'm just, let's say I take 20 pips as well. 20 pip stop, and I'm looking for 40 pips take profit. So at this point, I am trying to move to scratch around 24. That's the standard, right? 24 pips would be the standard. But I could see that price has a rejection around here, right? On this area here, there's rejection around that area. And every support or resistance is a risk for price turning around. So I'm thinking, while my ideal point to move to scratch is somewhere up here, I have this risk to contend with. I don't want to have, since it's so close, I don't want to have to wait, right? So once price gets to that support area, I'm moving to scratch. So in this style, you're considering the price action. You're considering what's going on in the market. You're considering the price action in that instance. So you move to scratch based off of what you see. But in some cases, this support area will be too close to entry. And you can't just move to scratch. In that sense, you won't be giving your trade any real shot. So you might want to consider just using the standard style. But when you have a risk around that area, you might want to just move to scratch just in case price starts to reject off that level and starts to come down, right? You could, this is the thing with choice and back testing. This is what I would do, but you could play with it for a few trades and see how, if you're comfortable with making these decisions, right? Don't just assume things because I'm doing it. But that's what I would likely do in this situation. I would move to scratch once price gets to that level. I wouldn't wait for the 60% of the move to take profit. So looking into the last method I use to secure risk, in this case, let's go again, assuming this level here is your stop run, right? And you have your confirmation here, and you also still have this level as a risk to contend with. You have your confirmation on this candle right here. Stop is 20 pips, and you're looking to take profit at 40 pips somewhere here, right? What I'll do when I have a risk here, this resistance risk in this case, is once price gets to that point, the standard will be to move to scratch at 24 pips. So then again, we have this area here where we'll be considering moving to scratch, right? Somewhere here, which will be 24 pips from this area down to that point. So we will be moving to scratch somewhere at that point. We have this risk below this point here. Rather than waiting for this point, I would actually take profit. Now you have to understand that this is just an example, right? And then this scenario risk could be slightly lower than this point, and in some cases it could be higher than the standard point where you would have to move to scratch, which in that case you don't need to use any of these ideas. But in this case, I would take profit right at this point while leaving my stop exactly at that point. But this, it's only in the condition where from my entry to that point, I have at least a 1-to-1. My risk of 20 pips, I want to be able to get 20 pips at least before I get to that risk. This is where I would take profit, right? In this case, my risk remains the same. And if price comes back down and takes me out, I would be losing nothing. That would be just break even for me, because now, while my risk remains the same in pips, it's now half the value. So if I was using one standard lot, right, and price gets to this point, I'm closing half of my position. So now I have 0.5 lots open, right? And if price goes down, I'm now losing half of what I originally would have lost, and the same exact amount or more, or of what I would in this case, or less, sorry, of what I would have actually taken in profit, right? So the idea here is to not move your stop loss. So by taking this profit, you invariably have made your move to break even just by taking out half your position in profit. You've invariably moved to scratch, because if price turns back down from that point back to your stop, you are at scratch, right? The downside to this is the minute you do that, you're no more looking for a 2-to-1 risk reward. If you get to full take profit, you're only going to get 1.5 to 1 reward to risk. While this is interesting and it is something I do every now and then, I would usually use this strategy when I'm generally really worried about that risk in that area, or I'm not so confident about that trade. Because in the end, the minute you take out profit from a 1-to-1, you're already reducing your total reward to risk, right? So because at this point now, you're going for 1.5 to 1 reward to risk. Because if the price continues and hits your full take profit, you're only going to make 1.5. Basically, if you're risking at 2% of your account, if you're risking 2% of your account, you're likely to make 3% full take profit. So the idea here is you're sacrificing your full size in reward to guarantee more of a short-term reward, in the sense that the likelihood of making full take profit isn't as clear to you as it would normally be. So you want to take some profit out early to invariably secure profits, and at the same time protect your downside, right? The advantage here is the market could actually go down, get to 60%, and you move to scratch on the standard level, on the standard system, and the market will come down and take you out of scratch. In a normal circumstance, you would have just gone out of the trade at scratch, but in this situation, you would have booked some profit. So over a series of trades, this can turn out to be helpful when you have like lots of scratch trades. But when you have a situation where you're hitting full take profit all the time, you end up making less profit than someone who just stuck to the standard system. So it's really about choice. It's really about how well you understand the market, how well you understand structure, and what you're more comfortable with. So when if you choose to practice this style, if you choose to take out half, if you choose to move to scratch at support or resistance, or if you choose to just wait till 60% to take profit, whichever one you choose, it has to be consistent across the board, and it has to be based off of your comfort level. Because if you're not so comfortable, you're less likely to repeat it over and over again. So I hope you enjoyed both the standard method of moving to scratch and the alternative methods of moving to break even that we just discussed. Thank you very much for watching this video. Leave a comment, like, and see you next time. Happy trading.